Hi there. Are you a well-paid professional, business owner, or retiree looking for a way to make your money work hard for you? Are you tired of the stock market CDs or other financial investments? And do you wish there was a way to get out of the time for money trade? Well, if so, this video we're going to talk about 3 unbelievable advantages of multifamily syndication, what it means to be a passive investor. So first of all, a lot of people think about investing in real estate. They think if I invest in real estate, I'm going to become a landlord. I'm going to have to take these calls in the middle of the night. It's going to be really terrible. It's going to interrupt my life. And that's not what I'm talking about. What I'm talking about here is truly passive income. And that's the first benefit we're going to talk about multifamily syndication, is that somebody can be a high paid professional, can have a business, can be a retiree and not have to deal with that. And how multifamily syndication works is basically working with a reputable sponsor, a reputable operating group that has been doing this for a while. They basically go and buy an apartment building using money from investors, and there's a split, typically 80% of the profits. This is one example, 80% of the profits go to the investors and 20% goes to the operating group. And so what it allows for just some, the group who's running it works hard, and the passive investors, their work is really on the front end to vet the property and vet the deal and make sure that it makes sense. But the idea is that it actually is scalable, that you actually can grow your wealth without having to be busier and to do more. So my background is I've worked with a lot of physicians as a consultant in the medical field, and I'd see physicians that would literally make millions of dollars a year, but they'd be 60, 70, 80 hours a week with no control over their time. And if they didn't go in and do that procedure, if they didn't go in and see that patient, they wouldn't get paid. And so this idea of passive income is developing kind of this other bucket where you can put money in there and you know that you can get double-digit returns pretty consistently in this other type of asset class or other type of investing. And so that's really what I love. One of the things I love about multifamily is truly passive investing. The next thing really is the idea of it is an inflation hedge. And so the second benefit is that when you invest in multifamily syndication, we haven't really had this become an issue. It hasn't really become an issue lately, but back in the 70s and 80s, we had double digit, I think at one point almost 15, 20% annual inflation. And so if somebody owned and was just sitting on cash, that cash was worth less than it was the year prior. And so, the Fed even has a forecast target that basically 2 to 2.5%, they're going to try to have the currency worth less and less. This is by Robert Kiyosaki, who wrote the book Rich Dad, Poor Dad. If you haven't read it, it's phenomenal. It's the #1 selling personal finance book of all time. But he says cash is trash, and he says savers are losers. And the reason is if you have this cash, and what's happening right now is that the Fed is printing trillions of dollars. We can say now the currency supply has increased by 2.5 times what it was 12 years ago. Now we haven't seen significant inflation, but if that picks up, owning real assets such as multifamily income real estate, it will allow you to basically ride that up over time, because typically rents rise with inflation, which is really a huge advantage. The third advantage I want to talk about is the tax advantages, the unique tax advantages that come through owning multifamily real estate, particularly through syndication. So what's amazing about this is that you get to get a great return on your money. You don't have the volatility you have in the stock market, but you basically get to write off some of the expenses. You get to defer others. There's something that's unique. You can Google this term. It's called a cost segregation study. And what it allows you to do is it basically allows you to write off or defer a substantial portion of the money that is made through the property. So what that means is if you're a passive investor and your 50,000 doubles to 50,000 more, so it's 100,000, you can a lot of times write off or defer that to kick the can down the road, which is great, or you get to write off some of it continually down the future. So this really gives it an attractive, something that makes it more attractive than other asset classes. So basically what I would say, multifamily investing, multifamily syndication, it's attractive in any sort of economic environment. And I encourage you to watch the next video. If you are interested in learning more, we wrote a special report about investing, comparing the stock market and real estate and kind of how the pandemic affects all that. If you're interested in that, there'll be a link in the description here, but bronsonequity.com/report. If you're interested in investing with us, we are constantly doing deals. You can go to bronsonequity.com. You can join our investment club. We'll let you know about upcoming deals. We'll look forward to seeing you on the next video. Well, hey there, before you go, make sure you like this video and subscribe to this channel so you can get new content as soon as it's available. Also, check out this report up here that I wrote about investing during and after a pandemic, comparing the stock market to real estate and other investments. And then down here, you can check out the next video.